Good morning, everybody. Welcome to the Game Plan. Of course, I'm Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And we're going to go over all the keys to the market today. We're going to look at what's moving. We're going to look at the S&P chart, as well as a couple red flags that are popping up. For instance, the VIX. If you look at the VXX, the tracking ETF, yesterday afternoon, as the markets were trading near their highs, the VIX began to rally. And usually, remember, the VIX is an inverse mover. So when the markets go up, the VIX usually goes down. When you start to see the VIX playing kind of the same move as the market, meaning that it starts to go up with the market, that tells you institutions are starting to buy protection. In other words, they're thinking that the markets are going to start to pull back. So listen, that doesn't mean we're going to pull back today. We'll have to watch and see, but it's basically a warning sign that there are signals that institutional money is now buying that protection for a potential pullback. So just little things like that starting to pop up on the radar. We don't have a lot of economic data today. Yesterday, we got CPI out, came in better than expected. Tomorrow, we'll get PPI, Producer Price Index, and that'll be interesting because remember, tariffs will initially show up on the producer side, right? So it goes to the producer first, and then eventually they pass it through to the consumer. So again, the CPI yesterday coming in better than expected, not super surprising considering all the inventory that was bought ahead of the tariffs. But the question is then, do we see inflation on the producer side that could be eventually passed on to the consumer? All right, let's jump into the charts here, folks, and take a look. This is the ES futures, so the S&P futures. And what we're seeing is the markets kind of in the early morning, around 6 in the morning here, we started to rally to the upside. We then kind of chopped around. We're now coming in a little bit. But net, if we look at where we closed yesterday, we closed right here on the S&P. Yesterday, we are slightly positive. Now, we're not above yesterday's highs yet, which are right here. But again, from the close yesterday, we are slightly positive. So let's keep an eye on this. And I'm going to go over a couple other things that are catching my eye today in terms of warning signs for the market. The VIX was just one. We'll go over a few others. All right. Let's flip over to the daily chart. So the daily chart for me continues to be a kind of chart that, first of all, has been a magnificent rally, right? Even beyond what I would have thought. Remember, I was looking at this gap fill as the starting point of where I began shorting the market. Basically, that's exactly what I did. And I shorted a little here. It kind of chopped around. And then the last couple of days, it's pushed up. Yesterday, I did add to those shorts pretty aggressively based on how extended the move is. And again, just to show you guys here, we can take our price range tool and we can say, okay, how much have we rallied? And it's basically 22.5%, almost in a straight line. This was kind of the one pullback right here that we saw. But the point being is that the rubber band is being stretched more and more and more and more. And at some point, you'll get that retrace, which is all I'm looking for as a swing trader on the charts. All right. So again, we'll keep you guys posted, or I'll keep you posted on that. But keep an eye on these little low pivots. This was a level I was watching yesterday. We pushed through it, and now we're kind of into this underbelly here. If we continue up, you'll be starting to hit all of this and eventually double top on the ES or the S&P futures. The NASDAQ's kind of interesting here, folks. The NASDAQ composite, again, incredible move to the upside. This one far outperforming even the S&P. The NASDAQ has rallied 28.5%. Again, I was saying this to the traders yesterday in the trading room. You know, I could probably count on one hand in my 26 years when the stock market has gone up 28% on the NASDAQ in a matter of 5 weeks. And that's what it is. April 7th was the low, and here we are at the 14th of May. So literally 5 weeks to the day, 28.5% rally in the NASDAQ. Now, for me as a swing trader, that breeds opportunity. What does that tell me? It tells me there's volatility. It tells me that when you get a retrace in the market, and it's not to even say that we'll make new lows. Like, let's just talk basic retrace, just standard retrace on the market, you should get at least a 5, maybe 7, even 10% pullback. And that for me as a swing trader on stocks like Palantir, on stocks like Robinhood, on stocks like, you know, some of these other ones, that can mean 15 to 20% pullbacks on those. Very, very lucrative if you're a swing trader. And then who knows where things go in 3, 4, 5, 6, 7, 8, 9, 10 months. That doesn't really matter to me. It's a shorter term opportunities. Okay, so flipping back to the charts here, we have the NASDAQ. We know that we're still stuck within this bigger parallel here. So again, low from COVID to the high of the bull market to the low of the bear market in 2022. That creates a trend line here that we extend out. We drag up the parallel, and I'll show you exactly what I did. I basically put in this trend line. We dragged it up here, and that gave us our exact high in 2024, right? Now, the idea is that as we come down, sure, you're expecting a bounce. Like, it's very rare you go straight here. Like, even looking back in 2021, the top here, we came down, then we had a big bounce, then we came down again, we had a big bounce, and eventually we hit the low end of the parallel. The idea here is much the same, although this has been a much more violent move to the upside, but down move, big bounce, down move, bounce, eventually coming down to this trend line down here. And as long as this parallel holds, I would generally expect at some point for us to roll over, even if we go up to the high end here, which is somewhat unlikely. But let's just say we do. At some point, the rejection would come in, and in probability basis, as we can see, you come back down to the low end of the parallel channel. All right. Now, the other thing to just keep in mind is if we do our Fibonacci retrace here, we can see that again. Look at where we are on the NASDAQ, and let me go back to the daily chart. Here's your 786 Fibonacci, and that's what we hit at the high yesterday. That was actually like to the penny almost the high on the NASDAQ yesterday, and we did pull back a little bit. I'm watching today. Do we get above that and close above it? In which case, maybe the 886 comes into play, or do we start to get rejected where it looks like we're going to gap up a little bit, but not above yesterday's highs? Do we then see selling coming into the market? Now, looking at the 10-year continues to climb. Now, the 10-year yield, folks, please understand this continues to be a warning sign. When yields go up, it's the equivalent of the Federal Reserve hiking rates, right? So again, the 10-year goes up. That means the 30-year is going up. Basically, all the bond divisible timeframes are going up, right? And so basically what that's telling us is that money is becoming more expensive to borrow money, to take out a mortgage, to refinance, to use margin for buying stocks. It's all going up. And so the idea is that generally as the yields have gone up, and if we take a look at the 10-year yield, I mean, think about this. We've seen a rally from about 4.1 on the 10-year to now 4.5 on the 10-year. That's a 40 basis point hike. That's almost the equivalent since May 1st, since just the first of this month, in 2 weeks. That's the equivalent of almost two hikes, 225 basis point hikes by the Federal Reserve, or a 50 basis point hike, right? So again, think about that and what that's doing. Now, so far, it has not influenced the markets, but at some point, if yields keep going up, and they're up again today, do we retest this level here? That's going to be your first resistance just below 4.6. And at what point does it become problematic for the market? Another thing to keep in mind here, look at the US dollar. So remember last week I talked about the US dollar. Here was your upsloping trend line, classic pivot low, classic pivot low. We tagged it right here. We bounced, we broke down, we confirmed. What do I always say happens? What is the most probable outcome? I say once you confirm a breakdown, you eventually retrace to where? The scene of the crime, essentially retracing back to that trend line. Well, look at what we did here on Monday. We went right into the scene of the crime. The dollar is now starting to pull back. So in theory, right, based on probabilities, we should see the US dollar, obviously chopping, but in general, will start to go even lower. I have my next longer term target price by basically, let me flip to my weekly chart here. Here it is. If we go to the lows from 2011 and connect it through this low, our downside target on the DXY would be just below 97. And again, right now we're trading at around 100.67. So that's about a $3 drop on this here to the downside, a little over $3. And that would be your point. Now, if the dollar is going lower, in general, it would probably insinuate the economy continues to slow. Now, again, one other thing I'd just like to point out is if we look at copper, and again, usually I wait to do commodities till later, but we can see that copper here has not really rallied since the China cut in tariffs was announced. In fact, it's basically gone sideways. This is the weekly chart. But the point being is for the week, we are basically flat on copper. This is the weekly candle. We can flip over to the daily and you can see, you were initially down on Monday, up on Tuesday, and down a little today. But the point being is just be aware that the market euphoria that we're witnessing, you should take it with a grain of salt. And again, one of those factors is that copper, which is one of the best gauges of economic global activity, is not going up with this big cut in tariffs between the US and China. And what does that tell us? It tells us that smart money, and again, I'm just relaying what the charts are telling me and what it means generally historically, is that smart money is saying, hey, listen, even though the tariffs have been cut to 30% on China, that's still going to net slow the economy, and it's not enough to create a rebound in economic outlook based on what we're seeing. Now, listen, if you listen to Goldman Sachs, if you listen to all these other banks and all these other players out there, a lot of the analysts are upgrading their price targets for the S&P. All right. So again, remember that analysts tend to jump on the bandwagon. Analysts are really not that good. Number one, they almost never give sell ratings. Sell ratings is something they never do. Even in downturns, they almost never give sell ratings. Even if a stock drops 50%, they've never adjusted their kind of buy. They're either like outperform or buy or strong buy, right? Or market perform. Market perform is like the equivalent to them of a sell. All right. So just be aware that there's this tendency to always be bullish from the analysts. And as soon as we got this type of stuff, we saw a lot of these financial firms, which are run by these analysts, upgrading the S&P price target. For me, I almost look at that as a contrarian indicator. I say, okay, they're upgrading, which means they're feeling the emotional psychology of the bullishness. That translates, and retail investors then see that and say, oh, well, I need to be more bullish, so I need to pump money in. Meanwhile, the people at the top of the institutions, right? So this is way above the analyst level. They're saying, oh, yay, we got all the retail coming back in. Let's start unloading into them and basically using them as exit liquidity. It's very kind of counterintuitive. You have to think like through 3 or 4 or 5 layers, but I want you guys to get to that point as investors where you're always suspect of what these big firms are saying. All right. Be a little aware. Can be ulterior motives out there. Okay. In any case, going back to the charts as we talk about more warning signs, copper again continues to come back in just a little bit here. Now, if we look at a few of these stocks, look at this, guys. This is an interesting chart on Palantir. Now, one of the things that has me very aware that retail is coming into this market is that the stocks that retail loves are going bananas. What stocks are they? Well, Palantir's one of them. But look at Palantir. Look at this longer term trend line. You take your high from 2021, so the bull market high, you connect it through this high, and look at what we tagged yesterday, and pre-market, we're right there again. All right, so again, this is a big level for Palantir. Let's see what happens today. But again, there's a lot of resistance there on Palantir. Another one, Robinhood. Robinhood has had a huge, massive move up. And just to show you the magnitude of this, from April 7th to today's current level, 111% move. But look at the last few days on Robinhood. And Robinhood is a key chart that people retail buy, right? They're jumping, they're FOMOing into this. In addition, it's coming into double top. That's a warning sign right there. Another stock, SMCI. SMCI, huge move yesterday. Look at this in the pre-market, guys. It is going nuts in the pre-market, up another massive move. So it's trading all the way up here. This is a favorite by retail. Right? There's plenty of these other names as well that are favored by retail. But the point being is that these are the ones that are running. And again, that to me is something to be aware of. Now, you could also say the semiconductors have caught a bid, and that's generally a bullish sign for the market. We can see that NVIDIA has made a strong move up here. But look at this trend line. Pivot to pivot to pivot, broke down, retraced to the scene of the crime, fell down, and look at where it's back to. So again, yes, the semiconductors are strong. There's been kind of this hope that a lot of the restrictions on the semis that were put in by the various administrations, locking them from or blocking them from selling their chips to overseas countries, now they're kind of being semi-rolled back. And so you're seeing the semiconductors catch this big bid. But for me, looking at these levels, this tells me it's a story that, yeah, sure, there was upside there in Nvidia, for instance, but now it's getting into a level where you want to be a little bit cautious, essentially what we would call a retrace to the scene of the crime, right? Here it was, hit, bounced, broke down, almost like a head and shoulders, frankly, right? Basically a head and shoulders pattern there. Shoulder, head, shoulder, a little small shoulder here, but nonetheless, back to the neckline right here. That again could be a small signal to be just on alert. And then, of course, I talked about the VXX here. Look at the VXX, guys. So yesterday, the VXX ended basically flat on the day, yet the markets, the NASDAQ in particular, was up about 1.6%. The S&P was up almost 1%. Generally, if you know how the VIX works, the VIX is a fear gauge. And so the VIX or the VXX should be going down when the markets go up. When it doesn't behave in that manner, you start to say, okay, is this a heads up by institutional money that there could be something lurking here in the markets that's basically going to be a pullback? And again, who knows if we go and make new lows? Eventually, I do think we do. But in the very least, a simple pullback is tradable for me as a swing trader on the charts. All right, let's jump over to Bitcoin. Bitcoin is holding steady. Let's go to the daily chart. Now, look at what pattern Bitcoin's making. So if we look at this pattern, and then it popped up, and then it kind of here, and then popped, kind of the same sort of pattern. So at this point, this would be considered a beginnings of a bullish pattern. It's not fully mature yet, but essentially this would imply to me that the bias is slightly bullish now as we continue to form this pattern for a double top. All right, so we'll keep an eye on that. And again, I've already talked to you guys about my game plan. I shorted a little bit right in here, and then again, I'll add right here and here. Those would be my 3 entries on my short on Bitcoin if it continues up. And again, do I love Bitcoin mid to long term? Yes. Do I think eventually when the stock market pulls back that Bitcoin will pull back 10 or 15%, which is perfect for my swing trade? Yes, I do think that. So again, remember, there's always a difference between long-term outlook versus short-term outlook. All right. Now, if we flip over to gold, gold should continue to sell off. That's exactly what it's doing. Why is gold selling off? Because it's risk on, right? So people are saying, why am I holding gold, which is kind of a safe haven? Everything looks, and I'm being a little facetious and comical here, but people are saying, oh, everything looks perfect. Everything's going to be great. Everything's just fine. So gold is coming in, but the charts predicted that, right? And this is the beauty of it. Here's your topping tail. Here's your parallel channel. And we knocked that out of the park. I mean, I went out on a limb when everyone else was bullish. And I even talked in the game plans about how, listen, this is where I make my bones, is by going counter when everyone is screaming, oh, gold's the greatest thing. I say, wait, it just hit a technical level. Then it put in a daily topping tail. It's short-term pulling back. And look, this is the zone I told you guys to watch, this level down here. Excuse me. So again, we're looking at that coming back into that level. And that will be a level where actually at that point, I think it bounces. Just taking a little drink here. My voice getting a little bit on the hoarse side. Excuse me. All right, let's go on to silver here. Is silver breaking out? Let's find out. The answer is no. Silver is not breaking out for the time being. And again, it's still stuck within this kind of parallel bullish pattern. Now, this is still bullish, but it is not breaking out yet. And we have to monitor to see if it can break this line. If it can break this line, then we get a big move to the upside, at least up to about 34.50 and potentially beyond that level. Next up, let's look at oil. Now, oil for me, it's getting closer and closer to my resistance level up here, 65 to 66. That'll be a level where I look to take a short trade on that. And then lastly, natural gas. Remember, I canceled out my short level on nat gas because it got close to my level and then pulled back. And it's just continuing to inch lower here. So there's nothing to do here at this point. We probably don't even need that trend line. Now, the one thing I'm seeing on this, I'm going to show you this, guys. And this is really, really important, right? So sometimes I draw my trend lines. And honestly, sometimes they're off a little bit. But you have to admit when they're off. Like, okay, my level, I drew my line. This is where I thought it should have been. And ultimately, it didn't come to be that. And I want to show you something. So we all know where I had my trend line on natural gas right here, right? I said, basically, it said, hey, if we shoot up into here, I'm going to short it basically just above $4. But look, what I did was I took this low and then it cut through here and then I put it to this high thinking, okay, I'm probably right here. But what? if we lower this down here? Okay. We take this low and we go right to that low, and then it pierced here instead, right there. But the body never closed above it. Look, see that? So that's simply, as a trader, that's simply what I would call a misdraw on a trend line. And that can happen because, number one, we're basically all human. So, we're gonna do the best we can on drawing our trend lines. Occasionally they're gonna be off, but basically that trend line was off. It is what it is. And really, it hit the trend line. I just thought the trend line was higher and it pulled back. And so it's funny because sometimes we say to ourselves, and this is the last thing I'll say to you guys today, is that sometimes we say to ourselves, oh, it didn't hit my line. It didn't hit the trend line. Weird. In reality, it's probably that we misdrew it. It's human error. The charts are always right, right? We know that the charts do what they want. They're always right. It's our analysis that can be wrong. And that's why I always stress to you that I'm not perfect. I'll have my losers. I have my bad calls, but I play a high probability game. And that's what we all need to do. Ignore the hype, ignore the nonsense out there, the narratives. Focus on the charts. The charts are your truth teller. They're the best chance we have at making money consistently in this market. All right, go have a great day. I got to get to my trading room. There's going to be some good trades today. I'll see you soon. Take care.